What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leverage bullish semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit that subscribe button. That way, you're notified whenever we release new videos. We do release videos Monday through Thursday and once on the weekend, but we release bonus content from time to time as well. So make sure you have that subscribe button hit. This morning we are coming to you. We're on vacation, so we're trying to be a little quiet this morning, not wake everybody up. I hope the volume is good enough for everybody, but you may need to turn it up just a little bit. I did want to get you this information, even though I was on vacation. So let's dig into it real quick. For the agenda, we're just going to recap Friday's intraday price action as well as the QQQ internals, and then we'll take a quick look at SOXL's price action from the week, month, quarter, and year. We'll go over the market maker's expected move for this coming week, and then we'll set our 4-hour triggers and targets. 4-hour markers as well as our triggers and targets for Monday as well as the coming week. We'll review the triggers and targets for the month, the quarter, and the year as well. So let's get into the charts. We're looking at Friday's price action. Once again, sideways intraday. Not a whole lot to be done unless you're really scalping. We'll make this a little bigger and just make it all of Friday. But you can see that we opened up here at 29.37. We've got our 4-hour markers of the overnight high, previous high day. Overnight high does overlap with the 4-hour trigger to the upside. And then we've got the 4-hour trigger to the downside, followed by the previous low day, and then the overnight low was just below that. The other levels of note are the market maker's expected high for Friday was $30.20. Market maker's expected high for the week was $28.64. So we were, by Friday already outside of we're above the high of the market maker's expected move. And then the market maker's expected move low for Friday was down here at $28.14. So once again, sideways action, not a whole lot to do. We did get the opening print with the lower high underneath this opening print, as well as the hour downtrend line. So you could have taken this lower high and wrote it down to overnight low, right? It hit previous low a day, which is the first target, overnight low, which also coincided with a 15-minute broadening formation from the previous day, the end of the previous day. So we got the bounce there. Didn't bounce back up to the top of the broadening formation, but it just slowly worked its way back up. So, not a whole lot of movement intraday. The moves have really been overnight, over the past week. So the swings have been, kind of the money makers for the week. Intraday was a lot tighter action. So not to say you couldn't make money, but the much smaller moves to be captured. So to make the same amount of dollar profit that you are used to, you would have had to kind of load up on contracts and take those smaller moves. Let's take a look at the internals for QQQ for the week. And this kind of shows it, right? We've got sideways action through the days, right? All through those days, we've got sideways action, and it's just these gap ups, right, that give us our movement upwards. Monday gapped up slightly. We got the sideways action. Tuesday sideways action, waiting for PPI. PPI was released on Wednesday. We got the gap up that coincided with Oracle earnings as well. And then CPI was released on Thursday, so we had another gap up, but again, just sideways action throughout each of the days. What we can see down here is vol QD. Money was still coming in, right? So the bears aren't aren't in control by any means, right? This is very much a kind of buy the dip environment right now. With this type of money coming in, it's not as widespread, right? We can see it's more concentrated when we're looking at the breadth measures here. ADQD, we're right along the zero line on Monday. Pretty, we're below the zero line. Did get close to trend lower zone on Tuesday, but still came back up, and we're mostly by the zero line. Same with Wednesday. Thursday was kind of unique. Again, we had the CPI following the PPI, so just really solidifying people's feelings of more than one rate cut this year, and at least one in this month. So we did have the gap up, and see Thursday we had a lot more money flowing in. The breadth was wider, so we did the Qs outperformed SOXL that day, but when we have this more um, this tighter action, not widespread, money's not widespread coming into it. It's just that's when we can kind of get our run ups with SOXL. So again, the internals are not something we're going to use to base our trades off of, but just another tool in the tool chest. So breadth was not very wide throughout the week, and but money was coming in. So that's how the week looked from an internals perspective. Let's take a look at the week from, or just not the week, but overall price action from a day perspective. Right, we can see this range that we've been in for 11 weeks, the 24 to 28 range. Again, briefly getting pops, little pops outside, above 28 and below 24, but overall have been sucked back into the range that we've been in for, I think it's 12 weeks now. So just like not the last time we poked above the range, but the time before that, we had a couple of green days followed by a red day that pulled us back into the range. So again, we've got a couple of green days, a red day. Do we get pulled back in? Possibly, but this is it's not a green hammer, but it's not an inverted hammer either, right? So this shows a more bullish action than bearish action, right? We did close slightly below where we opened, but the fact that price action pushed down below previous day's price and pushed back up by the end of the day to close near last month's high, and the high all-time high of at least this range, right? I don't want to say all-time high, but the highest high of this range, we're closing right next to. So maybe Monday do we get maybe a failed two down again, just like we did on Friday, or maybe we get a more solid two down and then find our support Tuesday and bounce up from the 28 range instead of using that year flip as rejection, using it as support to go and test this weekly broadening formation. So that again, the same thing we've been talking about for 12 weeks. Not a whole lot more I can tell you. We are above this lower high line from the week perspective. So things are looking somewhat bullish. Let's go ahead and pull up the week. Get us a more clear chart. Oops. Get the fibs out of there. So if we just look at everything from the week perspective, again, we're moving sideways. Some could say a flag, right? So if we are going to break out of this flag, the rule of the measured move for flags, whether it's bull or bear, you take the length of the pole and you put it on top of the flag, and that's where you should go to. So it looks like we should get back up here, maybe close this gap, ride the weekly broadening formation possibly, and get back up to last year's 50%, at least making the higher highs on the week perspective, possibly on the month. We don't want to get into too much predicting, but that's the way things are looking as though they may go. Again, we're just moving sideways, but with a bullish edge. Slightly moving up as we move sideways. So nothing too negative to say here from a week perspective. We've all finished very solid green, and it was a lower high from a week perspective. So we got a higher low here, higher high here, as opposed to this low and this high. So possibly starting the uptrend again instead of just sideways with the higher low, higher high. That's the beginning of a trend, but we've got to continue to get higher lows and higher highs to continue that trend up. Let's look at things from the month perspective, just real quick, right? So we're still an inside month, but we're getting closer to breaking to the upside, right? So we got the 3-1. If we do break to the upside, we do still have to keep in mind, depending on how this month candle finishes. If we get an inverted hammer or something that pulls us back down towards or inside last month's range, we've got to be looking at the 3, 2 up, 2 down next month on the board to bring us back down to the bottom of the range. Maybe fill this gap, but it would just signal at least more sideways action from that standpoint. Doesn't necessarily mean we would get bearish at that point. We're still in an uptrend, but the 3, 2 up, 2 down is a strong reversal that would bring us back down here to the bottom of this 3. Again, like I said, possibly closing the gap, but the bottom of the 11, 12 week range we've been in is right here as well, so it should offer some good support, along with the month flip and the quarter flip, right? We've been flip-flopping over the year flip for the past 10, 11 weeks, but the quarter and month flip have remained solid support for us, as well as last year's low. So looking good from the month perspective. We'll look at the quarter real quick. And again, we're in this 2 down, 2 up. It's in force because current price is above last quarter's high. So we are still targeting the high of this candle, which is to the left of the 2 down. So 2 down, 2 up, targeting the high of this candle, which is 36.15 up here. Again, that would break through this weekly broadening formation and be riding this weekly broadening formation up. So again, no predicting. We just want to see where things are going. And then the year, again, we've finally flipped that year back green. Oops, the chart here. So we can see, oops, come on, Thinkorswim, work with me here. Yeah, here we go. So we had the 1, 2 up, 2 down reversal strat on the year, which was targeting the low of this candle, 621. We got to that 723 back in April, and it reversed. So I think that strat, is pretty much over. We're trying to get into the reversal here now. If we can finish the year out green, hammer up more, then that looks good for a 2 down, 2 up next year, targeting the high of the candle to the left of the 2 down, which is that 70.08. So not quite the all-time high, but last year's high we would be looking to get. So of course, having these gaps to fill above, we would run into a little bit of resistance around this 50% of last year's range. So we want to keep that in mind as well. But it would be very bullish if we were to finish the year out with the green handler. So not much more to say there from that perspective. Let's pull up tomorrow. Actually, let's pull up the from tomorrow. We're going to go ahead and look at the market maker's expected move for next week. And we can see we've got here at 31.85 is the high and 26.75. If you're not familiar with the market maker's expected move, there is, oops, let's go back here. I know on Thinkorswim, on quite a few trading platforms, if you go to the options chain, so the options chain for next week, September 19th, we go over here and we look, we see there's an 83% chance that there will be a $2.55 move, either to the upside or downside, or price should be contained within a $2.55 move to the upside and downside. So we can see 29.30 was the close price on Friday. If you add $2.55 to that, you get this 31.85. If you take 29.30 and you subtract the $2.55, you get the $2.75. So that's our market maker's expected move. We should see price somewhere within this low and this high. Now again, it's just an expected move. It's 83% chance that it will happen. So it's very likely that, just like last week, price could go above the market maker's expected high. It could also go below the market maker's expected low. So it's not an end-all be-all for price action. It could go through that, but it's just another piece, another tool in our tool chest that we can use to judge where we want to make entries and exits, or how long we want to let something run. Just another tool in our tool chest there. So we've got our market makers expected high and low. Let's go ahead and just set our 4-hour markers and triggers and targets for Monday. We'll go from the scalp scalp point of view first. We've got just a 5-minute candle up here, but we can see how we've got our major levels, the 4-hour levels here. Where's our market maker? Oh, I guess on this chart I didn't put the market maker's expected move high and low, but we don't need those for our 4-hour markers for scalping. We've got our previous high a day and overnight high. I'm sorry, the previous high a day and 4-hour trigger to the upside, they overlap. We've got our overnight high as of right now, the 4-hour trigger to the downside, the overnight low, and previous low a day. So those are our four main markers: previous high a day, overnight low, previous low a day. And then I like to layer in the 4-hour trigger to the downside and to the upside, because it's a point of inflection. The last 4-hour candle of Friday did not go below this point, and it did not go above this point. So it's still a point of notice. It's not necessarily a target that we would have, just like previous high a day or previous low a day would be a target, but it is a level that you would want to know about. That you could price action could slow down there. It could reject from a even shorter time frame perspective to gather more money to go back to the upside or downside. Just a level that you want to know about. So um, just from a intraday scalping perspective, let's go ahead and say that opening print is right here. Oops. So we've got opening, if we have opening print here, say by the morning, overnight low, sorry, overnight high has gone to, just say there. If we get price action that opens here Monday, we're just watching to see if it opens up and goes up. We're looking for higher lows above opening print to get involved in calls, right? So price action opens here, it goes up, it comes back down, and it finds a little bit of support, 1 minute, 5 minute candle if we're really early in the morning above the opening print. Then once that higher low is locked in, you want to enter calls first targeting previous high a day, then your overnight high, and then you can target any day targets that we have out there for like the day perspective. But from a purely intraday scalping day trade perspective, we want to take higher lows above opening print, targeting previous high a day and overnight high. Inversely, if price action opens here and pushes lower, we're looking for any type of lower high below opening print, and we're buying puts targeting overnight low, and then second target would be previous low a day. So obviously more money to be made to the downside just using those rules. But again, it's just like the strat is the base of our charting and trading method. The lower highs underneath opening print and higher lows above opening print are just the base for our intraday trading. That's the repeatable part, right? So sometimes you can get a little bit more risky if we do get the push down to overnight low, and we know that that's a good area of support, right? This level right here. You could take a call here if we get the if we get some type, say we get the lower high, we push down to overnight low, we get a push back up, and then we get a higher low above overnight low. You could take an entry on a call first targeting opening print and then previous high day and overnight high. It would be a little bit more risky than what the repeatable strategy calls for, but if you're familiar with trading, you're not new to this, and money flow and price action, and you know that this is a good solid support, there's no problem in taking a call without higher low above overnight low targeting our other targets, right? So definitely want to make sure you have your stops in place and giving yourself good risk to reward with your entries. But it's perfectly reasonable to take a call from down here with the higher low and target our 4-hour levels going back to the upside. All right, so especially with the environment that we're in right now, it's very much a by the by the pullback environment, so by the dip environment. So just something to keep in mind, right? That's good from an intraday perspective. Let's go to our 4-hour perspective so that we can set our triggers and targets. Oops, come on now, think or swim from that perspective, right? So remember, we've got our 11, 12 week range that we've been in from 24 to 28. We are at the top of that range, obviously, the extreme of that range. So we popped above the 28. We're at the 29.50 level where we've reversed before. So we want to look out for any reversals. The 4-hour price action, let's get this a little bigger. 4-hour price action wasn't exactly bullish on Friday, right? We had a bearish engulfing candle, or a red 3 here for the first 4-hour. The second 4-hour was a failed 2 up. So we are, there's a high percentage chance that we're going to get the 3, 2 up, 2 down, triggering at the low of the second 4-hour candle of Friday and targeting the low of the first 4-hour candle of Friday. So 3, 2 up, 2 down. Now, if we do get a push up, we get the 2 up continuation. At that point, again, we have a very clear entry at the high of the second 4-hour candle of Friday, but our exit is a little bit more. It's not as defined, right? With a reversal strat, you have an entry and you have a defined exit. Here, we have to use our knowledge of price action and other extended levels that we have from that range to get our targets. Let's look at, I think we've got, oops, yeah, we've got some fib extensions here. So we can see that the last high to low of the range that we have, we just went ahead and drew a fib for that, and we've got some fib extensions out here, 3114, 3170, and 3239. The 3055 should also be ingrained in your brain if you're familiar with this channel. 3055 is the 61.8 fib of the 2020 low to all-time high. So it's a very major level that you want to keep in mind. Let's just go and bring up the month perspective. You can see how, what's going on? Come on now. You can see how over time, over the last 5 years since 2020, we all know what happened in 2020, but right here's the fib, there's the low, here's the all-time high. 61.8 fib is over here at 3055. You can see how it just wicks through it here as resistance, wicks through it here as support, support, resistance, support, 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 support. So that 3055 is a major level from a higher time frame perspective. So we want to keep that in mind even when we're down here on our 4-hour chart looking at an intraday trade or an overnight swing or something like that. We still got to keep that 3055 in mind. So just go ahead and look at our notes for Monday. Right, Monday, September 15th. On Monday, there will be 73 trading days left in the year. The close price on Friday was $29.30. We don't have our opening print for the week yet because the week has not opened, but the opening print for the month was 2408. So the month would go red at 2408. The quarter opened at 2438, so it would go red at 2438. And the year we know flips red at 2813 because we've been playing with that for the greater part of 11 weeks now. So we do have the market makes expected move here for next week. Again, it's $2.55 with a range of 31.85 to 26.75. We'll get the market makers expected move for Friday when that comes up, so we'll leave that blank. We know where our gaps above are and our gaps below are. Right, so this is just a very quick reference that we can look at, especially if you're not like sitting in front of your desk, or you want to make a move while you're out and about or something like that. You can just very quickly reference your notes and have high confidence in a trade that you would get in. But again, for the triggers and targets from the day, oops, what did I not have the, let's see, this would be a 3, 2 up, 2 down, triggering at 29.22, magnitude is 28.75, and we've got an extended target of 28.13. To the upside, again, it would be a continuation and not a reversal, so it would be a 2 up, 2 up, triggering at 29.55, and we'd have a target, extended target of 30.20, and then again that 30.55 comes into play. All right, so from the 4-hour perspective, that's how we would play it. Let's look at the day perspective, and we can see that again this range that we've been in. I wish I could give you more, but we just got to go with what we're working with, right? So we did have a failed 2 down on Friday. So again, not the most bearish thing in the world, but it's definitely not bullish, the most bullish thing in the world, right? It was hammer-esque, you could say, but it was still red, and it was 2 down. So it's kind of 50-50 on the day perspective, in my opinion, right? If we could still trigger the 2 up combo 2 down, right? So this 2 down combined with another 2 down would fulfill the strat, right? Because this 2 up 2 down was supposed, the magnitude should get us here to this 2807, which was last week's 50%, which is right below the year flip as well. So you could definitely see that as a bounce point. But it did not reach that on Friday. So if it does, we get price action below Friday's low, that would trigger a combo 2 down, and again we would be triggering the low of this. Now if we get the 2 down 2 up, let me take this out of here. If we get the 2 down 2 up, there's not a lot of magnitude, right? So the trigger is the high of the 2 down, the magnitude is the high of the 2 up. So you got your last month's high is here as well, possible rejection point. But if we do break through, again, we've got the 30.20 and 30.55, and then we've got the weekly broadening formation that we could run into as well. So still, 50-50 on whether we're going to continue to push up or not. If we don't push up, it's a very good opportunity for us to make a higher low and turn what was resistance into support, right? So say we get the combo 2 down. So we have the 2 up, we have the 2 down here. If we get another 2 down on Monday to fulfill this strat, we come back down to this level. We could bounce off at the top of that gap. And if you're familiar with this channel, we've talked, at length about how gaps can also be bounce points or rejection points, and we've shown plenty of evidence of that. If we get the bounce off the top of this gap, off the year flip, then we start going back bullish, right? But for now, we're just we're waiting to see which way it can go, because it can go very easily either way, and just pull us back to the bottom of this range that we've been in for 11 weeks, right? So from the day perspective, let's look at our triggers and targets. We've got 28.79 to the downside to trigger the 2 up combo 2 down, magnitude at 28.07, and we've got extended targets at 27.43 and 26.96. To the upside, that would trigger the 2 down 2 up, again triggering at 29.55. Not much magnitude there. I don't even know why I don't have the magnitude on there. I might have just not put it on there just because there was such little magnitude. But the magnitude is that 29.61. So it's 5-6 cents, not a lot of magnitude. So we'd want to look for our extended targets of 30.20. 30.55 is the major one I keep bringing up. It's that 61.8 fib. And then we got the 31.14 as an extended target as well. Okay. So that's how things look from the day perspective. Let's go ahead and look at the week and get things kind of wrapped up here. I hear people waking up, and I want to go ahead and get this finished. So, but I do want to get you guys as much information as possible. So we do, from the week perspective, again, we put in that higher low, higher high combination, hopefully starting an uptrend, right? If we do get the action to the upside, it's a 2 up continuation. So we have the very clear entry at the high here, but we've got to look at our extended targets. Which one did we have? I think it was this. I thought I had a extended target fib for us. That I created. Yeah, there we go. So again, from the week perspective, this one's a little funky, but we have that 31.14 and then that 31.70, 32.39 as those fib extensions of that last range. The 150 extension plays in well very nicely with that market maker's expected move high. So let's get back out here to a more clear chart. But you can see again, we're just moving sideways, slight uptick. Could this be a bull flag? Hopefully so. That's what the bulls would hope. Could this be a rejection of the year flip here? We're just moving sideways until we push back down. That's what the bears would hope for. We've got plenty of gaps to the downside. This monthly downtrend line that we've fought for weeks. If we fall back below it, it could come back into play. But if that does happen, of course, we're flipping the year, the quarter, and the month red. So you'd have full time frame continuity to the downside. So the bears would be in control at that point, but nothing to signal that at this point. We're just bullish consolidation is what a lot of people would call this. Again, a bear flag, bull flag. So from a week perspective, we've got our triggers and targets. Oops. We go 2 up, 2 down. If we go below 26.57, if we do go below 26.57, the magnitude for that move is 23.80, which is just above the last year's low of 23.50. But again, if we do reach that magnitude, we can have some extended targets here of 22.57, which is the gap on the day time frame, 21.98 and 28.18. Right, so we've got our gap down here. 27.55 is the first target that we had here, extended target. Where'd it go? On the week, 22.57. Sorry, I said 22.75. 22.57 to the downside, 21.98, 21.18. All right, so 26.57 again is our trigger right here. So we're looking for 23.80 if we go to the downside at the very least. If we go to the upside, triggers at 29.61, targeting that 30.55, which is a 61.8 fib. And then we've got our extended targets here. right? Because again, it's a continuation, not a reversal. So we have a very clear entry, and then we have to use our judgment on previous price action and major levels as to where our targets would be. So we've got that 30.55 right here, which is at 61.8 fib. Then we've got our 32.64 as a higher high on the week perspective, and then we've got the 36.15 as a higher high as well. So we went ahead and worked those in, right? So then again, September, we are an inside month. We're still waiting for a trigger to the downside or upside. We've got our targets ready for those. If you've been following along through the channel, at least since the beginning of September, that's where we've set our triggers and targets. And then the quarter, we're still in force, 2 down, 2 up. We are looking for that 36.15. We have not quite reached it yet, but we're still bullish. We're in force to the upside for the 2 down, 2 up. The year again, kind of giving us a little bit of trouble, but for right now we're above it. We're green on the year. Keep forgetting to mark that as green. Let's go ahead and do that now. So we're green on the year, right? We did trigger the 1 2 up 2 down. That's why it's underlined, because it was triggered, but it did not fully reach magnitude, and it is not in force anymore. So that's why it's not bold. This 2 down 2 up is in force. That's why it's not only underlined but bold. So there it is, your triggers and targets for Monday, the week, a review of the ones for the month, the quarter, and the year. I hope everybody's enjoyed this video. If you did, please give it a thumbs up. It really helps the channel grow. We're not selling anything here, just trying to give as much free advice and education as possible. I'm trying to turn people on to the trading method that we use, the repeatable strategy that we use for the intraday trading, and as well spread the word about SOXL. By no means is it a new ETF. It's been around for years, but the more people that trade it, the more liquid it becomes, and the better it is to trade for everyone. So again, I hope everybody enjoyed this video. It's a little short. I hope I'm not too quiet for everybody. I'm just trying not to wake everybody up. It's still Saturday morning. I'm trying to be respectful, but got a vacation to have as well. So kind of trying to knock this out and get ready for the week before getting to a little bit of fun this weekend. So I hope everybody else is, if you're not, depending on when you're watching this, I hope you're already having fun this weekend. If you're watching this at the beginning of your weekend, I hope the rest of your weekend is fun. But let's make sure that we get our what they call work life separation, right? We spend plenty of time in front of the charts. So you got to spend time not in front of the charts as well, enjoying life and the people in your life and the things that you like to enjoy outside of trading. So hope everybody has a great weekend, or had a great weekend, depending on when you're watching this. Again, give the channel a like, make sure you're subscribed, and we'll look forward to trading with you on Monday.